Hello everybody, this is Matador from freetradingvideos.com, and I wanted to show you a trade in PCLN. It actually looks better daily chart than it does intraday. So we've been talking a lot about the 30-minute gap strategy in our forum, and I also showed you a couple of trades that did well recently, including First Solar and things like that. So here is something that looked great on a 3-month chart. Right, the stock had been in a nice ascending triangle here. It sold off on heavy volume. You can see that's increasing fairly dramatically here. Rallied back up powerfully, much more strongly than the broad market. Traced a higher swing low, and then on earnings here it has gapped up. It is actually gapping up past most major resistance up in here, at least recently. Except when I look closer, look where that overhead resistance is in this chart. So everybody's pretty happy up in here. The market sells off. Anybody who does not keep a protective stop is now getting beat up fairly badly. They're going to want out when it comes back. Again, that's the definition of overhead resistance. And so I'm looking at that saying, hey, there was a stock gapping up nicely on earnings. I'm going to look at that for a 30-minute gap strategy entry. And if I can get into it, great. If not, I'm not going to try to force it past the next logical spot of resistance in that chart, which is very, very close, 115, and then of course 120. So again, almost to the penny, it drives up there. So let's go intraday to see what that would look like. So put in 5-day, 5-minute chart, doesn't even matter. Zoom in just a little bit. Well, normally when a stock gaps up like this, I look for the stock to trade for 30 minutes before I touch it, and then look to enter the high above the high of that. So I zoom in a little bit here on an intraday chart. Just a 2-day, 2-minute chart. 2-day, 5-minute chart would work well also. All right, you can zoom in on either of those kind of ideas. But what I'm looking for is, does the stock trade for 30 minutes, put in a high that's reasonable that I could then look for it to take out and trade it to the upside? Well, in this scenario, I have 5, 10, 15, 20, 25, 30 minutes of trading. Straight up in a row, right into major overhead resistance at the 120 area, which I already defined as resistance from the daily chart. So not very many people would ever, if they knew what they were doing, buy long after 1, 2, 3, 4, 5, 6 bars up in a row, right when profit taking is about to come in, or the odds of that suggest that they're about to come in, and I'm losing a bunch of people who know what they're doing buying. So I lost 50% of what it's going to take to drive that stock higher. I also gained 50% of what it's going to take to drive the stock lower. So why would I ever enter a stock in a low odds probability right into a major overhead resistance on a daily chart? So not at all a good 30-minute gap strategy in this scenario, even though on a 6-month daily chart it looked like it might have worked out. It did not work out intraday. I would now wait for the stock to set up below 120 before I would get filled on this if it broke that. And again, today it'd be a little bit rough to do that because it'd be the first run up to overhead resistance. So anyway, nice way to analyze that intraday trade and stay out of trouble. Sometimes it looks better than it is, and you can fine-tune that again by looking intraday. Hope this helps. It's one more little facet of this great trade, this great setup, and hopefully we can talk more about that in our forum and freetradingvideos.com. I'll talk to you soon, and I hope you guys have a great weekend.